there can be only two outcomes you could have anytime you trade any instrument on the forex market. It is either you're making losses or profit. So a good and profitable trader, if he or she wants to be making profit, will definitely have an actionable plan towards achieving it. And if you want to be making losses, you just need to jump on any instrument on the forex market and trade. The outcome will always be the same. You don't have any data you're working with. Definitely, you're going to be making losses. The forex market can be compared to the building of a structure where the civil engineers, the builders, and the laborers on site do not have access to the architectural plan of that building. The outcome of that building will be a building with defects. This is how the forex market operates. You want to make profits, have an actionable plan, which is your strategy. You want to be making losses, do not have any plan. Just jump into the market and start trading. Hi guys, if you're just joining my channel, I welcome you. It's a go-to resource for honest experiences on how I navigate the forex market. I urge you to hit the subscribe button if you're new, and let's grow and learn together. Back, what are the strategies that we use? Your strategy could be different from mine, but by the time I'm done with everything I'm going to be saying, you will realize that virtually every profitable and good trader uses this strategy, but we determine our priority, what comes first. The number one of what I will do is to check forexfactory.com. Why do I do that? I want to have access to information that the currency pair that I am trading, there is no news during the day that is going to affect it. And if there's a news during the day that is going to affect it, at what time of the day will it affect it? So this gives me an informed decision that if a news is, let's say for example, if we are going to have core PPI on dollar around 1:30 p.m., I'm assuming today, I want to believe that if I find a low risk entry around 1:20 p.m., I will allow it skip through me and not trade. News can sometimes be funny. Even the medium impact news, you know, the trend of the market, could actually distort the trend of the market, take stop losses of people, then go back to the initial trend of the market. So I, as a person, I do not want to trade few minutes towards high impact news. If the opportunity comes, I will allow the opportunity to go and wait for another opportunity to come. If peradventure I had been on a trade and a high impact news happens, which I know will definitely happen, and I'm in profit, I will naturally adjust my stop loss to my entry point. In that way, even if the market works against me, I will lose nothing and I will not make any profit. And if the market is already working against me while I was trading, what I will naturally do is adjust my stop loss nearer my entry. I will not adjust my stop loss further. This is the mistake virtually most new beginners and those struggling traders would do when an high impact news is about to happen. They adjust their stop loss further, and that is like you're trying to blow your account. So for me, I will adjust my stop loss nearer. I want to be done with the trade. If it's going to take my stop loss, I want it to be a reasonable amount that I can bear with. Number two, or what I will do is quickly check for the trend of the market. And like I said in one of my videos, using the top to bottom approach to navigate the forex market, the higher time frame always win. So the trend of the market, I will find it on a higher time frame. Once I understand the trend of the market, whether it's a sideways market, an uptrend, or a downtrend, this keeps me informed of the direction of the market. Number three of what I will do is consult my journal. Because the journal has that I've created will have historical data about happenings on each time the currency pair falls to a particular price value. My journal, I consult it to see if there is a convergence between what is happening live and the historical data. If there is no convergence, like a divergence, totally different things, I also understand. So this keeps me informed. At this particular price value, there was a retest and an uptrend. I'm informed. If this is different, I'm also informed. The next thing on my mind, which is number 4, is the use of the indicators. When you use several indicators, it makes your decision more clumsy. So I advise use 3 to 4 indicators. For me as a person, I use 3 indicators. And I set those indicators. Number 1 of the indicators I'm going to actually use is my volumes. The volume tells me what the buyers and sellers are actually trying to do. So, and I set it as priority. I want to see those movements, what they are trying to do. I'm going to give an example. Take, for instance, if I see a volume where buyers are coming in, there is an increase in number of buyers coming in. What I expect to happen on those candlesticks is long movement in an uptrend. If I don't see that with higher numbers of buyers coming in, I sense that the sellers are trying to pull the market down. So I have an information about that. So volume starts in number 1 that I choose, and I use 2 other indicators. So for you, you could use 3, 4. It depends on you. But when you make use of too much indicators, it is more likely that the decision you are going to be taking becomes clumsy. Number 5, of what I will do or things I do, is patience. I know the trend of the market. I've consulted my journal. I've started using my indicators. The next thing for me is to be patient, looking for that right entry with a low risk. Unfortunately, the forex market creates opportunities, but most traders do not wait for that opportunities to materialize before grabbing it. Unfortunately, most traders create their own opportunities based on assumption, and that is why people lose. What I'm actually trying to say, if you are patient enough with the forex market, with any instrument on the forex market, you will see a low risk opportunity where you can place a trade. So that's the number 5 thing, patient. This is the time I will keep studying the movement on the price value. A certain place where the buyers are unable to reach, or a certain price value where the sellers are unable to reach. Number 6 is based on what I will have done in number 5, my risk management. Am I risking a ratio 1 to get a profit of 2, or a ratio 1 to get a profit of 3? Is it visible based on what I'm seeing? I've had so many traders say, once I sell opportunities, I quickly place a trade and start putting my stop losses. It is totally wrong. Anything could happen within seconds on the forex market. It is like comparing it to a football team that has a good strategy in scoring but has poor defense. It is more likely that team will lose because the opposition team will always capitalize using counter attack. This is how the forex market operates. So before placing any trade, determine your risk, the amount of money or capital you're going to lose if the market works against you within seconds. For me as a person, before placing that trade, I'm saying I want to lose 50 pips to make 100 pips. Once that decision has been taken, based on my identification of the price values that both sellers and buyers have been unable to reach. Take for instance, if a market is on a downtrend and in the course of studying, I found out that on the currency I trade, maybe which is USD JPY, I found out that the buyers have been unable to push beyond 149.70. I'm using that as an example. Every time, even with the high volatility, with the higher number of buyers coming in, the buyers are unable to go beyond 149.70. Then, if I'm going to place my stop loss will be 10 or 20 pips above 149.70. So I'm going to be looking at my stop loss at 149.90, based on the fact that I've taken my time to study what the buyers were unable to do. So risk management is very, very good. If you have good strategy and you do not have proper risk management, you are going to be making losses on the forex market. And lastly, having trust, everything I've done, I stay with a positive mindset. I place my trade, hoping that since I've done the needful, the trade is not going to work against me. And if the trade works against me, it is not the end of the world. It's not going to take away the whole of my capital, but a reasonable amount that I can withstand. And once that happens, in order to make myself happy, I withdraw part of my profits that I've actually made before to clear my psyche. I feel, okay, if this business has actually given me this kind of profit and I'm withdrawing it, it makes me happy. Today is just not my day. That's why I made the loss. And if the day that is also my day, I make my profit. So these are 7 actionable tips that I use to navigate the forex market. I hope it helps you if you're a newbie and you are still struggling on how to approach the forex market. I hope these tips helps you. Thank you.